The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, one more day to go here, and then we'll see what's going on here. By the way, if you get a chance, go see the movie The Big Short. It's really a good movie. Does a good job of explaining how things were in 2008, and I think it's something you can all enjoy. By the way, you know, folks, one of the greatest books I think that has ever been written was written by a man named Bernard Baruch back in the 1930s. Baruch was the personal confidant to I think, which president was it? Was it Hoover? No. I think it was, but he was really close to one of those dudes. He's also a good friend of J.P. Morgan. But that book, his autobiography, is really a book that you really should get. You know, it's something that I really like, but it's got some wonderful things in it. One of my favorite quotes, he was talking to Fanny Brice, who was the equivalent of I guess Julia Roberts in these days, as she was the #1 movie actress, and she was sitting down chatting with him, and she said, "Mr. Baruch, I would really like to know how to make some money in the market." And Baruch said, "Well, you buy low and you sell high." And she says, "Well, that sounds easy enough." He said, "Yes. Do you have 40 years?" I don't know if it can be done in 40 years or not. Anyway, folks, the first chart that I've put in here today is the chart that I looked at yesterday. It's still the same. Nothing's really changed very much, even with the big move that we had yesterday. Basically pulled up by the start of, Amazon and Google, are pushing the whole thing, and then they were helped along, of course, by Apple and some of the others. But the overall market, still is still in a downtrend. It really does look, very, very ominous. Now, before I get on to the stock market, I wanted to share a chart from our good friend Jim Bartolioni, who's given us some great stuff on crude oil and also the Canadian dollar, and he has a real interesting one here on the British pound that we've been looking at, because there's some really strong ratios here that pop up that deserve our attention. Now, he does a lot of work with the square roots of numbers, and those of you that have heard our show before, you'll know that I'm a big fan of Pythagoras. He was the first man, to use the square root of numbers back in the 600 BC. He also knew that the Earth was round. He knew that the Earth was 250,000 miles from the moon. He understood the moon cycles. He understood eclipses. He was so far ahead of the time that, of course, he had to go underground because he was being pursued by politicians for his talking about the Earth being round as opposed to being flat. But needless to say, the numbers are there, to look at. Basically, you can see there's 6 instances here of this 0.886 ratio, and 886 is the square root of 786. That's what it is. Now, what I do when I'm looking at things, I'm only looking at, 4 major ratios, 618 and 786 on retracements, and 1.27 and 1.618 on expansions. That's what I'm trying to do to keep it as simple as possible. Bart goes into much greater detail on some of these things, and when he sends them to me, I certainly pay a great deal of attention. And that's what we're having right now, is we're looking at this British pound down here at 0.886. What I was doing, and I just wanted to show you the difference between, but I can't say it on the air, but I just wanted to show you the difference. Oh, don't tell me I lost it. Oh. Merry Christmas. Oh dear, it's gone. I had my British pound up, which basically showed I was looking at this 140, 148 level, and his level is another 120 pips lower, which it's in fact hit it spot on. So we'll watch it very closely. Anyway, just keep an eye. We're going to be watching the British pound here very, very closely, you know, for something else to look at. Now, I did want to bring another one up. This is famous for everybody out here, and this is McDonald's. This is going to be a daily chart here on Mickey D, and you'll notice that if you like a 3-drive to a bottom pattern, you'll see that, hello, this is a 3-drive to a top pattern. And as you can see, we're very, very close to the 1.27 and 1.618 expansions up here. We're within about 60 cents on this, so keep an eye on this. This is over the past month, and it's made a beautiful 3-drive pattern, and it's acting very, very nicely. Now, we had the similar type pattern in Amazon, but it just blew through there with the big gap up that we had on Monday, and that you know, said that it probably is going to go a lot higher. So we'll see. We have a full week this week. However, the last day of the year is usually a lighter volume day, but there'll still be, you know, people around, and most of them will be half schnockered by about 11 o'clock in the morning. So sometimes you can take advantage of that, or not. We'll see. Okay, let's look at the market. Okay, we showed the first chart that was the longer term. Now, this is a chart that I put in the newsletter this past week because there was a possibility that we could reach the another drive to another third drive here, the 135 pattern, up around this 2080 area, 2085 in the S&P. That's nothing more than an ABCD pattern that is completing at this level. Now, if we look at the same pattern here, and I wanted to show it to you because I don't do Home Depot, folks. I would, but I just don't have time to. You know what I might do? Let me do it at the break, Mr. Peak, and I will get this puppy out to you out at the break. So I will do Home Depot out at the break here, and we'll take a look at it. But what I wanted to do was to show the New York Stock Exchange Index and what it is doing compared to what the S&P is doing, and you'll see a much, much different picture in what we've been doing in the market. Really, I mean, you know, we're really making lower highs all the way back to May 19th. This is a downtrending market, even though we're having these, you know, humongous rallies in some of these stocks that pull everything up. It's not doing that to the overall market. I guess there's only a few people that look at that, but boy, to me, it means something, I would think, because you got so many stocks that are going down as opposed to going up. I know we're up on the year now on the S&P with the action yesterday. We're up about 6%, and then we'll see that, you know, we'll see what happens with the rest of the market. But the Dow, I believe, is about unchanged on the year. So it's, you know, this has not been a very bullish year. So we'll see what's, you know, see what's going on with some of these things that we're looking at. Anyway, we want to watch that very, very closely. Okay, now we're going to take a look at gold because we are getting down to that. In fact, we've hit it already. That is this 1160 area that we're looking at. This is a chart we were looking at yesterday, and then I want to update it to you because this is what we're looking at now. We wanted to see the gold get down to about the 1060, not 1160. The 1060 level is what we wanted to see because we had a downtrend since December 21st. All of the highs were either 618 or 786. Nothing changed from yesterday. And then so what we're going to do now is to take a look at it where we are. And in fact, we've already done this. This is the one I updated for last night to show what was happening. And we did get down to the 1160 area already, and you know, somewhere around that 1160 to 1159 is where we should get a bounce in the gold. Whether we do or not, you know, I don't know, because it's taken 7 days, 7 trading days to get down here, and it's only been able to get down $20 in 7 days. That's a pretty good sign after having a $35 run up in the market to the upside. So this is going to be real interesting is whether the gold can hold this level or not. It's a real important level. We're seeing the same thing in the silver market, down around the 1380 level. It should be holding around this level right here, and we'll be watching that with a great deal of interest today. The problem is it's the end of the year, and frankly, folks, most people, this is the worst time of the year to trade. It really is. When I was at Drexel, those 6 years, we virtually did nothing the whole holiday season. As a matter of fact, from the week before Christmas to the first of the year was just sporadic stuff, but there was nothing of any major significance going on at that time. The rule was if you hadn't made your year by, the last 2 weeks of the year, you're probably in deep trouble. So we'll watch what happens at the end of the year. But come next Monday, boy, they're going to be rocking and rolling, folks, because 2016 promises to be a really exciting year. Not only because of the election, which will make it exciting enough when we elect President Clinton again. I wonder if she's going to have Bill Clinton run as the no, he doesn't want to have anything to do. We've got a can't take that right now, but I'll have to take it a little bit later. That's Janet Yellen calling again, folks, asking for more advice. And the reason why she's calling me is that she can't reach Mr. Basil Chapman. Okay, anyway, that's I forgot to turn off my cell phone, folks. That's unfortunate. That's what I did wrong here, and we will take care of that in a bit. Okay, sorry for that. I was going to have Miss Yellen on the show, but she wants $25K for 10 minutes, and I decided Tom didn't want to go that deep, so that's a joke too, folks. I better not talking too much about this to make too many jokes, because some people probably think I'm being too funny. My little 4-year-old grandson, I tease him all the time because he's so funny and he's so smart, and he always looks at me and he says, "You're joking me, aren't you?" But he's smart, boy. He's got this little train set, and he builds the bridges, and he knows how to raise and lower the bridge to get his little trains through, so it's pretty good. Okay, let's move on. The silver market, we should hold this 1380 to 1370 level. Gold, we should hold 1359 is what it should hold. Wow, let's get these prices right. 1059. And then we'll see if that's going to be the case. Folks, there's still, deflationary things out there. Oil is still lower. Now, today's an important day in oil because we are having a chance for the oil to get down to the $36 a barrel level. That would be a 61% retracement of the move that we had, starting off the bottom. We'll look at this, and we'll come right back, and we will get into the next segment in just a minute.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at this crude oil. As you can see, we've had these bear market rallies since October. Each one of them has been just about equal. And now what we're doing now is we're pulling down towards the 61% retracement of this range over the past week. And we have the oil numbers coming out at about 10:30, I believe. And if they're bearish, they'll probably, get it down. It's only about 80 cents away from where we're trading right now. So you want to keep an eye on that. If you have an interest in buying oil, that's the same way of going along the Canadian dollar, which I still believe has a lot of room to go to the upside. I think we've made a major correction in the Canadian dollar here, and that we're getting ready for at least a good rally for this, and we'll take a look at it. Now we're going to switch gears here, and we're going to move on to Mr. Peak and his request to take a look at Home Depot. And here's something we've had on our watch list for a while, because we did go up and we made the 1.618 expansion up there at 134.5. That was a 3-drive pattern and an ABCD pattern. This is similar to the patterns that we're having in Google and also in Amazon, but they've extended, past the 1.618, which with some emotionalism, which is easy in these markets, these can't do this. But as of yesterday, all we've done is make a corrective of the high that was made, back on November the 17th in Home Depot. So it still is certainly still very, very strong, but it's getting signs that it is weakening a little bit. There should be a lot of resistance in this 135 area to 136 is what it looks like to me, but that's what Home Depot looks like. And of course, with everybody watching Home and Garden TV, with the Flip and Flop and the Cruz brothers, I can't remember what they call the Property Brothers. So everybody watches these programs now. At least everybody in our house does, and we'll see what happens with Home Depot. Frankly, I'm a Lowe's person. I like Lowe's better than Home Depot, but that's just my own personal preference. Okay, the next question that someone had was about the gold. And boys and girls, we are at the proverbial moment of truth in the gold. The gold hit 159.60, 159.30. The number we're looking at was 159. And if it goes here's a place where you got a contract that's worth $105,000. 100 ounces of gold at 10,060. It's $106,000, and you don't have to risk more than $300 to see if you're right here. That's the bottom line. We are at the proverbial moment of truth. We've got the pullback that we've asked for. It's coming down quietly. You don't have any really long-ranging bars. There's no gaps involved or anything. It might not work, but when you look at the risk control that you have here versus what your profit potential would be, this is the kind that you want to keep on your guideline of what you want to be watching. This one, to me, the gold market is an easier trade than they're both equal, than to buying the crude oil at the around the $36 barrel level. But you see, if you're buying crude oil at $36 a barrel, you're buying something that's going to be coming down quite a bit. It'll be down more than $1.20 a barrel in a matter of a few minutes if it hits this when these reports come out. But this is a situation you either believe it or you don't. And if you believe in the numbers, you put the orders in, put your stop in, and let them rip. All I know is that on a percentage basis, you're going to win more than you're going to lose, and your profits should be greater than your others. Now, the real unknown here is putting your own analysis into it, and that's the real key part. Is if you can get rid of the emotionalism of this, that's the real key. That's the one thing that Mark Douglas worked with me for years and years on, and I still wish he was here helping me do it, because I certainly think about him every day. Last night I was watching the basketball game between Michigan State and Iowa, and Iowa was a big underdog, Michigan State being the #1 team in the country, and they got beat at home by 13 points by a good Iowa team. So, college basketball is one of those things. On any given night, someone can get really hot against you, and you can really, bring yourself to potential loss just because, things are not working as well as you'd like to. Same thing in trading. Not all the time, everything will work in your favor. But boy, when it does, that's a great feeling. And anyway, we'll get back into the psychology sometime in the future. We are going to have Jim Bartolione on after the first of the year as our guest.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls. Oh, dear. What did I do wrong now? I got it. Oh. When I get ready to do this show, I put all these charts in order, and then when I put them on my desktop and I try to find them, they hide from me, and I mark them, and I don't understand. I'm just not capable of functioning as a technician in these high markets. So doggone it, what am I looking at here? Okay, let's go on to the next one I wanted to talk about, which is the I wanted to do the Japanese yen versus the US dollar, because that's going to be a real interesting one to look at for a lot of different reasons. But on a shorter term basis, thank you, Mr. Z. You could be my wingman anytime, but we'll have to see what the old Top Gun has to say about that. Anyway, the dollar yen, as you can see here, we're in this 120 level. We got as high as the the 126. This is the trade that Tom O'Brien liked back at when it was at 73 or 74 several years ago, and we've had the big run up. Now this could be potential for a trade of the year. That's because if you look at this on a long-term basis over the last 5 years, what's happened here, this was the risk-off trade that they had when they were doing, what they call that thing? They could not have to roll over. Oh, I can't remember what that was. Oh, well, I'll think of it in a minute. Anyway, the dollar yen, as you can see on this long-term trends that are here, we've hit these last three that are important. The right-hand side of this chart, where you see the key levels, those are the markings, because if we break below that, which would be below 119 in the tray, in the dollar yen, then that would tell us we could get maybe our first major 38% correction in the whole move over the last few years. This is very unusual that we have something like this. We want to watch this, very, very closely. That's the main thing that we want to be watching. So we'll see. Now the question arises. One of the things on the news today was that Christine Lagarde said that the world economy was basically held hostage by Europe, and then also by China and whoever, the emerging markets. There's always somebody saying something, and everybody has their. It was called the carry trade. Thank you, Mr. Bill. I couldn't remember it to save my soul, and boy, believe me, if there's a soul that needs saving, it happens to be mine. Anyway, the carry trade is the thing that made that thing work for very, very many years. And there's another one that I don't understand how they do the economics behind that. But we live in an unusual time. There's no question about that. Folks, we have a situation where we have so many things out there that are being traded. When I first started doing this 50 years ago, I think we had about 15 or so commodities, maybe 20-some when you considered New York. And now I believe on CQG, you have about 280,000 different things you can trade when you consider all the intermarket spreads and all the other things that are involved. So there's not going to be a door open wide enough if something happens to some of these markets, because they're not going to be able to get out. That's going to be the bottom line, I think. But we'll have to wait and see. We started down today in the market here. But this is just, real early in the market. And again, we're in the last couple of days of the month, which have a positive bias. And then with the first couple of days of the new year, we'll have a positive bias. But we'll see what happens. The overall market is still in a bearish mode. I put the chart up for the New York Stock Exchange Index. And the same is true as the NASDAQ. Even the NASDAQ with the Google going crazy and also Amazon, the NASDAQ was not able to make new highs again. So, and remember, we're only looking at about 15 stocks out of the 100 of the NASDAQ stocks that make up that NASDAQ 100. There's only about 10 or 15 of those stocks that are really running the whole show, because it's weighted. It's price and cap weighted, and so these you've got a huge capitalization on Google and Amazon and stuff of that nature. The amount of money that these folks have made off the internet is truly mind-boggling, folks. I mean, never in the history of the world we've had so many billionaires. I mean, it used to be the only billionaire when I was growing up was John Paul Getty. Not counting Aga Khan, and some of the kings and princesses of Saudi Arabia and the Prince of Brunei and stuff like that. But the only billionaire that I remember was John Paul Getty, and but now, I mean, look at Mark Zuckerberg. What's he worth? I mean, what, $14 billion? He's, 27 years old? I mean, that's not a bad idea for a company that doesn't really produce anything other than advertising and pictures. I mean, that's a pretty good deal. What are you going to do? Okay, and you stop and think that when oh, gee whiz, when you get older, these names just don't. I guess this is the first sign of CRS. Oh, who was the guy that owned Andrew Carnegie? When Andrew Carnegie sold his company in 1929 to Charles Schwab, he sold it for $486 million. In today's dollars, I believe that's $5 billion. You can imagine how much money that was, because that was before income taxes, and that was a lot of money. So we live in an area where a dollar here, a dollar there, pretty soon you're talking about serious numbers. Okay, we have another market that is approaching the moment of truth, and that is the Treasury bond market. We have now come down, and we are you're right. Mr. Bill posted in there, if you ever go to Los Angeles, folks, you really need to take the trip up to the top of Mulholland Drive and see the Getty Museum, because it is really fantastic. It has the great masters in there, and it's really amazing. But what we have going on in the Treasury bond market here was the, I have to tell a story about I won't do that. Okay, the Treasury bond market, we've come down, and we're coming down to test the 786 now. Yesterday we broke through the 153.20 level, and now we're very close to that 152.20 level, which is the ABCD test, and that would be the second test, because we've had it back in November. We made a slightly lower in November, and then we rallied, very strongly for 6 points, right up to the 61% retracement, and now we're coming down to test the 786 down here at 152.20. We're trading at 153 and change right now, so that's another one that looks, really interesting here. But overall, the bonds, really look lower, and we'll see what's going on. Okay, I'll tell the story. The Getty Museum used to be right on Malibu Canyon, not Malibu, on the Pacific Coast Highway in Malibu. And right across from the Getty Museum was the Malibu Bay Club. And my good buddy, Jay Cross, who was one of the big traders of the early 70s. He was the very first computer programmer for Commodity Corporation back in 1965. Amos Hofstadter, hired him, and I happened to be one of Jay's best friends. God bless him. I passed away in '95 in an auto accident, but he was the one who introduced me to Amos, and he was still my great friend. But anyway, he was a member of the Malibu Bay Club, and we were going over there to have breakfast on Sunday and then go over to the museum a little bit later, and he said he had a special guest at breakfast that morning, and sure enough, there were two people. There was the ambassador to Scotland was there. No, not Scotland, Sweden. The ambassador to Sweden was there, and then what happened was the main thing is that the guest that Jay invited for breakfast was Mike Love and Bruce Johnson of the Beach Boys. They were good friends of his, and I had met them before, so they were there. And the ambassador to Sweden was there, and of course Jay introduced him and said, "This is Bruce Johnson and Mike Love of the Beach Boys." And the lady from the ambassador to Sweden said, "Gee, you guys are kind of old to be lifeguards." And, the place just absolutely cracked up. She didn't have no idea who they were. And, of course, they explained to them, and they still didn't know who the Beach Boys were, so we'll see. Anyway, okay, someone asked me if I've ever been to the Balboa Bay Club in Newport Beach. No, I've never been interested in boating or anything like that, and that's a big yacht area. A lot of high-priced talent down there at that place, so you'll see, we'll see see what happens. Okay, anyway, let's move on to the next one. Well, we're in a holiday atmosphere. Why not? 877-927-6648, and we'll see what happens. Those of you that are not familiar here with TFNN, about 6-7 years ago, Tom and I had a bet on whether the bonds were going to go above the 166 level. And I told him that I'd take a ride in one of his yachts if the bonds ever got there. And they got to about 158 and change, and then they changed the contract for September of last year where they went above 160. But that was not the same thing. But I do not like boats, and I don't like planes either. My good friend Twentyman had a plane, and he took me up in it twice. The second time we were going into Provo, Utah, and it was like the flight from hell. And when I got off the plane, I kissed the ground and I took a commercial plane back because it was so. We went into those Wasatch Mountains and this plane was being tossed around like a paper doll. It was like a paper airplane, and it was terrible. And boats are the same way. You know, if God wanted people to be on boats, He would have given them gills. That would be my guess here. Okay, so we got the market weakening up a little bit here. We're Dow down about 55 points. The composite's down 16. S&P's down about 8. Let's see. We got the copper's about unchanged on the day. Gold is still holding that key level of 159, and silver's holding the key level at 1380. Whether that's going to last for the rest of the day, we'll have to wait and see. It just is a real key level. We got in about 45 minutes, we're coming out with the oil numbers. So watch to see if that crude oil can hold that $36 a barrel level, because that's going to be a real test. The old 61% pullback of the whole thing, and that would be something to really look at. I'm very interested in that particular level, so we'll keep a real close eye on that. Right after the first of the year, I'm going to have Bill Meridian from Cycles Research out of Vienna, Austria, our good friend. He's going to talk to us about some of the forecasts that he sees for 2016, and then I'll also have Arch Crawford on the horn to try to do that. And I'm also trying to get Larry Williams to come on, because Larry is one of the best traders that I know, plus the fact that he's an incredible researcher, and he can give us some ideas of things to look at, for the year of 2016. That's the main thing that we want to keep an eye on watching. But frankly, folks, I think that the two currencies to watch for the year of 2016 are the Canadian dollar. We're going to look at this here on the long-term monthly basis, and then also the other one that we looked at, which was the U.S. dollar versus the Japanese yen, and how it is lining up for a potential for a 38% retracement of this big bull market that we've had over the past 4 years. Frankly, I can't remember when we had a market that went 4 years without a 38% retracement. It just basically was, one way all the way. And this would be a good one to watch, because if we do get it, it should be pretty enough to see if it's going to be a pretty good movement till we'll take a look at it. But the support that I'm watching in the crude oil is it's simple. It's just a 61% retracement of this downtrend that we've had here. I'll put it up here. We can see it again. But with the news coming out here, we've had a lot of oil out there. I don't think there's anything that's been promoted more than Apple and Amazon. The fact that we do have a lot of oil. There's no question about that. It's on the news all the time. Yesterday, it was Iran coming out, and that they had their cost of production was $1 a barrel. Well, if their cost of production is $1 a barrel, that's the same thing it is in Saudi Arabia, because it's that same oil. It's just under the ground. That's basically looking at it. As far as the grains are concerned, I think we're going to be looking at it right after the first of the year. We're still down here near the lows, and we're going to see if that's going to be happening. All of this is related to the inflation that, we've had virtually no inflation in the stuff, and that's the main thing is, you see what happens, if it's going to bottom or not. But we'll have to wait and see. But we're getting tremendous water over in California, which they certainly need that. In areas where they do need it, they're not getting it, which is Southern California, where we had the big fire. They didn't get any. But up in the area of Central California, Northern California, the snow is getting pretty heavy, and that's good for some of the water. So we'll take a little break here. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks. We got the market is down a little bit. First hour or so. Yesterday, the first hour and a half, was really strong, and it continued on from that level. So maybe that's going to be up one day, down the next. Like we've always mentioned, any market that can give you 200 points in the Dow can take 200 points away from you. So we'll see how it ends up. Overall, nothing has really changed from the very first chart that I posted there today. We have more stocks declining than advancing. The breadth is still very, very bad. There's only about 120 stocks of the 8,700 that are out there that are making this market move. I know that seems hard to believe, but that is the true nature of what's going on. All you have to do is to look at some of these various indices, and you're going to be able to see what's really going on. We haven't really had a prolonged bear market. Well, that's the understatement of the year. But since 2009, we've had a little bit of a correction in 2011. We had a 8-week correction in 2014 when we got down to those lows of October of 2014. But we have not had a bear market in 6 years. And if we look at that long-term chart that we keep posting all the time, and I'm going to post it until it stops working, and that is the one that we got from our good friend Bart, showing the fact that the similarities to what we have going on now and what we have going on in 2007 are really the same. And be sure you get a chance to see the movie The Big Short, because it's about Michael Lewis's his shorting program that he had, but it's really pretty cool to watch that movie. It's very, very good. Star Wars, I thought, was very disappointing. I can understand why Disney stock's they're making a lot of money, but the movie was really not that good in my opinion. But what do I know? I'm not a Star Wars hippie or aficionado, what you want to call it. So anyway, keep your eyes focused on what's going on, folks. If you've got stocks that are not going up now, I don't think they're going to have a lot of help in 2016. Okay, we'll see you tomorrow for the last show of the year, and a Happy New Year. Feliz Navidad.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.